Good evening, everyone. Welcome to Banao Bharat's Trading for Living Monday live session. Historical day for Nifty crosses 20,000 mark for the very first time in the lifetime of Nifty. Nifty has been in existence since early 90s, and now here in 2023 it has crossed 20,000 for the very first time. The beauty is it has traveled about 800 odd points in less than 7 trading sessions. The whole of August excuse me, the whole of August Nifty was skirting around August lows. Each time it gave an impression that it is prepared to go much lower, but each time it did do small bounce backs. In fact, bounce back also was not very convincing, and at the same time, each time it cut the August lows, it was not convincingly falling also. Maybe as if market knew something about August, it was not just ready to go down, and at the same time it was not ready to go up either. The moment September came in, as if there was some muhurat for Nifty in the month of September, it did not waste any time at all. Right from September 1st, we have been seeing upward movement in Nifty. And today, 11th of September and 7th trading session in September, we are once again witnessing all-time high. Not just the all-time high, a very crucial psychological mark for Nifty, which is 20,000. Just a couple of months back, the whole scene was so gloomy, especially February and March. We knew how, people were discussing about 15,000 on Nifty, and then the next lower target in most of the people's mind was 12,000. Looking back, in just couple of months, March 20th I think was the first day of the reversal. April, May, June, July, 4 months of solid up move and 1 month of pause in August. In fact, Nifty had started falling from the highs of 19,980 levels towards the end of July, and in the early August 3rd it made one critical low of 19,300. Then whole of August the talking point was about 19,300, and there was another important low at 19,224, I guess. That was July's low. So Nifty just once cut the July's low, and by then August had ended. August settlement on 31st was a crucial settlement, and even in that settlement there was no signs of any kind of recovery from there, and it was more or less looking like a languishing market in the coming days also. But then markets are markets. Always it has got something which we don't anticipate. Like Santa Claus always comes up with a surprise gift. many a times a pleasant one and few times not so pleasant one. But this time it has been a really a very pleasant surprise. In fact, I was under the impression that for this calendar year, July's high will be holding good and we will be somewhat in the sideways movement until December. So that is what market is at every stage, and sometimes almost immediately or very quickly it teaches us and makes us realize how insignificant we are or our opinions in the markets. Nevertheless, we are cruising well in the markets these days. While we enjoy the euphoria, we should also become cautious. The noise level will only increase, and if there is any kind of reversal from here on, which most likely may not happen so very quickly, to me the Nifty party has just begun. Why would I say that? This bull run has been a very different bull run compared to any earlier bull runs, wherein the format of the bull runs used to be the large caps will lead or start off the bull run, and then it is the climax always with small caps and mid cap. This time round, starting from March, both small cap and mid cap have run up so much without large caps being participating. So the large caps participation is required for any bull market to be successful. If we see, this bull market is just 1000 points old. Why? Because calendar year 2022, in the month of December, we had seen the highs of 19,000. So from 19,000 we have now crossed 20,000, which means this bull run, which is in place since mid of March, is or has given us only 1000 points on Nifty. 1000 points on Nifty on a 19,000 base is around 5%. Any bull market will definitely not end with just 5% return, and we have already seen a substantial run up in mid cap and small cap, which has given more than 25% returns in this last few months. Of course, stock specific action has given us more returns, and it is true also that in this last 4 months, though index has given us only 5% return, index stocks have actually started doing much better than the overall index. Still, any bull markets are judged not based on the stocks. Bull markets are talked in terms of the bull run in the most watched indices. It could be Sensex or now Nifty. So when we talk of bull runs, we generally talk of indexes. Some particular stock becomes a multi-bagger here and there. We don't call it a bull market, but when the larger indices, the benchmark indices or the frontline indices give substantial returns, that is when we call it a proper bull market. There are no negatives in the macroeconomy, and there is a very important election coming up in the coming year. We have successfully concluded G20 summit. India has, in terms of GDP, has done really well in the last 10 years. The growth of the businesses and the household income is reflecting also in terms of tax collections via GST, digital payments, technical infrastructure, physical infrastructure, everything is on the uprise, which gives lot of positive vibes and makes us believe that this bull market could be in its very early stages until unless some major structural imbalances happen. I want to believe that this bull market will be taking us to much higher levels in the coming days. Yes, in between there could be some corrections. Yes, in between there could be some sideways movement, and in between there could be some stock specific collapses also, because some of the stocks that have moved in terms of multi-baggers are not actually being supported by fundamentals, or valuations are not in sync with the company's profitability or future prospects. So it could be a case where even though indexes may not correct too much, or if the indexes may not fall too much, still there could be some big collapses coming in stocks, which will be more of a stock specific action, and overall indices, in my opinion, is going to be at least 2 steps forward and 1 step backward. It's not going to be in a phase where it will go down 2 steps and come back 1 steps. The trajectory is firmly established onto the higher side. So this is a structural bull market which is in place, but bull market or bear markets, we are all very insignificant players. So it is important for us to protect our capital, to protect our profits, and be extra alert. In fact, in bull markets, retail participation increases, but complacency also increases. We take it for granted that markets will move only on one side. Don't be complacent. This is the common retail mistake in every bull cycle. At all times, retailers, they do the same set of things, and I just hope this time they do it slightly differently. Already retail is neck deep in longs. We are seeing continuous selling from the FIIs in this whole up move. All of this selling from FIIs have been mopped up by the DIIs, and also in a large way by the retailers. Retailers are good in entries, but they are proved themselves that they don't know when to exit. Retailers are always confused with respect to their time frames, with respect to their understanding of whether they are traders or investors. They are more of a ignorant lot, and when large part of the holding moves into the ignorant hands, then when there is some small event, you can see retail hands are very weak, and they will be in a hurry to sell, which will lead to cascading effects. There will be kind of a stampede for retailers to come out, and that is when the prices just collapse, and the smart people will be once again entering, and we will be seeing FIIs coming in at that time. So yes, we all believe in India story, but the stocks are all going into the retail hands who are not experienced, well versed in managing their finances. In general, Indian middle class is a lot with hand to mouth existence. They are not super efficient in terms of their household finances. So it is too much to ask for a retail segment to be expert in the field of stock market or in the field of investments. So my only urge to all the retail participants, whatever, as a whole we might be a large pool, but as individuals all our capitals are very limited and it is very insignificant, and acknowledge the fact that this, though we are in a bull market, we do not have enough experience or expertise to ride through the bull market or handle the bear phases. Stock market is a different animal. If you are an investor, you need to have a different kind of a psyche, not too much related to the stock market. And if you are a trader, then again your psyche has to be slightly different. All of these things comes through experiences, but generally retail participation, whatever I have seen, they are not ready to go through those experiences. They just end up being, they come as traders, they end up being long-term investors. Even during those long-term investment period, they do not learn things. Again this kind of a bull market starts and they are as freshers as they were 5 years back or 10 years back when they first came into the market. So especially now post COVID, we are seeing lot of new market participants. For them this is the first actual bull run. In fact, I would even say this bull run has been there since post COVID, which is late 2020s. 2021 there was one good up move but good correction also. Again 2022 there was one good up move, but towards the end it had started falling, and we saw the continuation of the fall for the first 3 months in this year, and from there on it has taken momentum. The real momentum has been built in only now. The story is good, but that doesn't mean we need to be complacent. We need to be extra alert now. The CA Institute has a logo which also states you should be alert even in your sleep. Yateshu supteshu jagrataha, which means even when you are sleeping you have to be alert. That is the slogan of our Institute of Chartered Accountants of India. So it is said a chartered accountant has to be vigilant at all times. That holds good for us also in stock market. We need to be vigilant at all times. Tighten your stop losses, book your profits wherever possible, and some of the old mistakes what you have done earlier, correct those mistakes, dump those stocks, get rid of those stocks even if they are in now small losses, wash away, clean up your balance sheet, make your balance sheet look more healthy with lot of good stocks which are having good valuations, and especially this is a golden time to pick up some large caps, because large caps have not yet started participating, and you would get a good up move as long as the overall structural story remains intact. So this is the time to clean up your balance sheet by eliminating all the so-called dreamy small caps which are still not performing you in spite of small cap and mid cap going so much higher. So today a good day for all of us, for traders as well as investors. More good days are ahead for all of us. We are generally hopers and dreamers, so nothing wrong in it. Let us maintain that innocence and be hopeful of our country's progress and possibilities of creating wealth through stock markets. Enjoy this bull ride with utmost care. Having said that, it's little late today. Let us once again meet tomorrow with a fresh perspective on the markets. Until then, Om Swasti.